person. That would be awesome.
Pretty flat at the moment, about 0.1% lower there. We're expecting sort of an early gain, maybe flipping to the green in the next few minutes or so as the staggered session gets underway. We do have these stocks, really sitting at record highs at the moment after reaching that threshold last week. So we could see a little bit of consolidation, maybe a bit of profit taking there as well. We did see some of the biggest gains in the previous session being led by real estate and consumer discretionary, were some of the strong performers going into the end of last week as well. And as I mentioned, we are watching kind of for how US assets perform as well, particularly when it comes to a little bit more direction for the Aussie and the US dollar. That trade at the moment sitting at 65.29. We're seeing fund managers are shorting the Aussie dollar position. That position is being held at a record high. CBA, for example, seeing the Aussie falling to 64 against the greenback, so potentially downplaying those RBA risks.
Yeah, and Heidi as well, of course, RBA to the Fed. We're going to have Jay Powell speaking over the course of this week, so that's certainly something to be tracking very closely here. But taking a look what we've got for US stocks here, because we have those futures just coming online. It was that 15th record in the Friday session, so we saw the S&P 500 topping the 5,100 mark. The question really for investors is can that winning streak continue? We know that March, historically, it's been actually a pretty good month for equities. When you're in election years, that calculus changes a little bit, so the gains aren't quite as good, but still you can expect to be in positive territory. Fairly flat right now. What else we're tracking is oil this morning. You've got Brent crude just a little bit high here, taking as well a look at the outlook for WTI. But we did have OPEC Plus extending their oil supply cutbacks to the middle of the year. So those curbs, on paper, they're worth roughly 2 million barrels a day, but they're going to be remaining in place until the end of June. Some are saying actually perhaps we could see that extension until the end of the year, but you are seeing Brent crude WTI, Heidi, there, just a little bit higher this morning.
Well, of course, one of the big themes that we're watching is really the trajectory to be set for China's economy going into 2024. The country is set to announce the year's growth target and outline its strategy supporting the slowing economy. This is taking place at the country's top annual political gathering this week. Bloomberg's chief North Asia correspondent Stephen Engel takes a look at the economic priorities for this year's two sessions.
Early spring's cross-currents in Beijing can be tough to read as China faces a host of economic headwinds ahead of the annual session of Parliament, the National People's Congress. With property market turmoil, poor consumer confidence, persistent deflation, destabilized geopolitical ties, along with plummeting FDI, and a rocky stock market, simply put, it's not been a good first year for President Xi Jinping since taking a precedent-busting third consecutive term last March.
The economy is still kind of slowly recovering, but I think the confidence has not come back.
So far, state-directed funds have mobilized to stabilize wobbly markets, while Beijing replaced the head of the securities regulator and cracked down on so-called malicious short selling. Banks, too, eased a loan prime rate tied to mortgages, and consumers came back and spent mightily. During the week-long Lunar New Year holiday, the best set of Spring Festival numbers since pre-COVID. But was it all enough to turn the winter bears into spring bulls?
2023 has been an unfortunate confluence in China of deflation and de-risking. I think this year the policymakers want to go back into reflation and hopefully reform.
In terms of the ability of these measures to really change the market sentiment, we are slightly more cautious. Because what's really needed is a change in the inflation outlook for the country and the overall sentiment in the private sector.
You've got sentiment which is rock bottom, and at the same time, I think the issues of policy credibility in the market.
The growth engine remains one where it's more, let's say, government-led, infrastructure-led, manufacturing and investment-led. And those might help to get to the growth target, but in terms of the more dynamism and the more sustainable type of growth, we think it still needs some work.
So attention now turns to Premier Li Qiang's work report on day one of the NPC. Post-holiday, Li called for, quote, pragmatic and forceful action to boost confidence. But how? So far, there's been no big bang policy move as leaders stress de-risking and deleveraging with fiscal strain in property and at local governments.
Instead of looking for more candies from the government, we really want to say, can we actually go back to more like what China started in its reform back in the early 1980s? Is more, allow the private enterprises, entrepreneurs to the right incentive to really to do things, the freedom.
Wishful thinking, perhaps, for global investors who got burned by multiple stresses on China's private sector, including COVID-0 and a regulatory takedown of big tech.
We've been out of China for a long time. We essentially started getting nervous about China when Jack Ma was hauled in. So that was in 2020, very long time ago. And for the past year and a half or two, we've had no exposure in China, none whatsoever.
The world is watching Beijing's next policy move, perhaps at the NPC, with great interest.
For more, let's bring in our chief North Asia correspondent, Stephen Engel, who joins us live from Beijing. And Steve, we're going to get this strategy for supporting China's economy through the end of the year. But just start us, because you've been in Beijing over the course of the weekend. You're here for these two sessions. What's the mood music over there?
Well, the mood music, if you will, is sort of a lack of confidence, especially in the private sector right now. Yes, there was a press conference yesterday from somebody from the CPPCC, which is the advisory body, which really kicks off today in Beijing, advisory body to the National People's Congress. He was saying that the economy is fairly good and we'll continue to see that trajectory of growth going forward. So there was a positive tone. And that's something that these leaders here in Beijing, is the 3,000 or so delegates of the National People's Congress gather, will try to find a right narrative, if you will, to try and put a floor on the sinking confidence that I just outlined in that report. The weather's good. It's one of those blue, sunny days in Beijing, blue skies, but very cold temperatures. It's well below freezing right now as I stand in front of the northeast corner of the Forbidden City. The actual Great Hall of the People, where the NPC and the CPPCC will be held, is on the other side of the Forbidden City. It's in lockdown right now. It will open up midday today as all those delegates from the CPPCC will start flooding into Tiananmen Square. We'll be there this afternoon, but right now we're just waiting for things and the festivities to kick off. Tomorrow is that big work report from Li Qiang. In fact, it's his first work report because, keep in mind, a year ago he took over as the new premier from Li Keqiang, but Li Keqiang opened up the NPC last year with his final work report. So it'll be interesting to see if there are similar terminology, similar verbiage coming from the fairly new premier Li Qiang, as he essentially tries to outline, of course, the priorities of the man at the top, that is Xi Jinping, who has continually over 2023 talked about high quality development. It is a term that he has used 128 times in 2023. A bit vague, but essentially it means we can allow lower pace of GDP growth as long as the growth going forward is sustainable. And that's something we're going to be watching very closely in that lengthy work report from Li Qiang tomorrow.
Steve, it's a real catch-22, right? Because on the one hand, this GDP target is really a symbol to try and instill confidence. On the other hand, is there a real risk that if they set it too high and don't follow it up with more stimulus or enough stimulus, that they could actually miss that target?
Yeah, that's right. I mean, there's been calls in the last few years, of course, just to scrap the target altogether. Why do it? Well, essentially that work report are the marching orders from the premier to the provinces and around the country that this is what you need to deliver. Now, in years past, we've had some leaders even kind of, out of the side of their mouth saying, it might be sort of man-made numbers, because if you get that target, they have to deliver, right? Last year they set the target of around 5% GDP growth. If I'm a betting man in Macau, I'm going to put my money on the provinces and the nation hitting that target, and that's what's likely, according to all the economists that we've surveyed. The majority of them expect a similar target to be set this year for 2024 of around 5%. So there are challenges, obviously, and that's where we're going to be listening and reading the tea leaves to see whether the policy will match the level of rhetoric and confidence that the leadership has in this economy, despite those struggles that I outlined.
Bloomberg's David Engle there in Beijing. Let's bring in for some analysis Tian Wang, who's the Chief Asia Pacific Economist at Vanguard Group. Always great to have you with us. And I do wonder, if we do get a target of around 5%, does that give you potentially more confidence that more forceful fiscal stimulus might be on the cards as well? What do you think are the sort of risks here of setting that target too high or too low?
Morning, Heidi. I think, the 5% growth target for this year will be a bit more challenging compared to what we experienced last year, because last year you have the low base effect and some pent-up demand after the reopening. This year, pretty much the hope is on what the government can do with the, policy stimulus, right? Especially on the fiscal side. I think regardless of the growth target, the market focus will be very much on what specific, measures or tools they come up to support the economy. At this moment, I think the focus will be on, what's the official fiscal, deficit, as well as how much will be the special local government bond quota and what other, measures, especially on the consumer side, to sustain the recovery in domestic demand. So regardless of the growth target, the focus is still very much on the policy measure. I think the biggest risk here is policymaker complacency.
That's interesting. Sorry, I didn't want to interrupt, but in terms of complacency, do you mean not setting sort of more forceful sort of policy guidance? Because as Steve mentioned, this work report is really kind of the playbook for the provinces, right? Are you concerned about how this will be interpreted?
I think the growth target is one thing, but then I think when you look at the, rhetorics from the, government officials, right? They kept emphasizing we should get used to belt tightening, and then, they are comfortable with, the growth and. They are arguing that the reflation will come back this year. So I think that's where we are actually getting concerned, because one thing you do see that the economy actually is still having negative output gap, right? So even if they achieve 5% growth this year, the output gap will still be negative. So that means there will be continued deflationary pressure in the economy. If they don't deal with that, in a timely manner, then I think there is a real risk for self-reinforcing deflationary spiral in the medium term.
The output gap really requires structural reforms, right? Structural policy measures. Are you expecting, a little bit more sort of big picture thinking, particularly in light of the demographic challenges for China?
I think they need both cyclical support to the economy, right, and also some kind of long-term, measure to boost up the confidence and build, win back the trust from the private sector. So, they need to deal with a lot of structural headwinds, the persistent housing downturn, the demographics. So I think this is where I think, other than the cyclical supporting measure, the government also need to focus on the structural reforms to boost up the productivity growth for the economy in the medium to long term.
What are you expecting on the property front? Because, of course, this is a problem that risks becoming multi-year with no clear solution either.
Yeah, I think when you look at the property market easing, right, a lot of focus in the past year has been on the demand side, cutting mortgage rate, easing the restriction, lowering the down payment. But as you can see, it has not been very effective because the confidence in the housing market is very low. If people don't see housing price to rise in the future, then they are not eager to get into the market to buy property. Now, I would say this year, the hope is probably on the supply side, right? Public housing, urban village renovation. So, focusing on the supply side, that actually could help to narrow the property downturn a little bit. Last year was like negative 10% contraction. This year, if we can get, say, 3 to 5%, still a contraction, but smaller contraction, that would actually help the headline growth a bit.
And of course, some of those solutions sort of appear a little bit maybe out of the box thinking. And something else that could be out of the box is Beijing just promoting these so-called new growth drivers, which we've started to hear some talk of in local media or state media. What are we expecting on that front, do you think?
Well, I think, some of the potential surprise, right? I think one of the focuses is what they would do with the consumer. Right, consumer demand, because I think so far a lot of the stimulus focus has been on, on the production, capacity side, right, investment, infrastructure. That actually creates supply-demand imbalance and adding more deflationary pressure. So I think one of the focus would be how can they help the consumer to make the economy more consumption-oriented, right? So trade-in program, consumption subsidy, even building up the social security system to reduce the precautionary saving incentive. That's one part. On the other hand, as many people highlighted, a continued industry upgrade, right? Green energy, green investment. So a bunch of things that can probably bring some new growth driver. But some of that, I would say, is not going to happen overnight.
Cheng Wang there, that was the Chief Asia Pacific Economist at Vanguard Group. Thanks very much for your time. And a reminder to keep watching for the very first edition of Bloomberg's The China Show. It's your definitive source for news and analysis on Asia's largest economy, from politics and policy to tech and trends. We'll have in-depth discussions with the newsmakers who matter. The China Show premieres Monday at 9 a.m. in Hong Kong, Shanghai and Singapore. This is Bloomberg.
Can AI make chatbots act like your very own personal assistant? Yes, with ServiceNow.
The world needs ways to reduce carbon emissions,
especially for heavy industry. We're working on solutions in our own operations,
like carbon capture
and clean energy from hydrogen.
So who are we?
Believe it or not, ExxonMobil. And these solutions can help businesses like yours.
Or yours.
Or yours.
Heavy industry with low emissions. Let's deliver.
It was not until 1990-something, 96, when I picked up a camera and I became a professional photographer soon after. And it's one of those things that it's like learning another language. You learn a few words and then you put a few sentences together, and one day you might be able to write poetry.
Bloomberg brings you the latest from China's annual National People's Congress, including China's budget plans, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg. Context changes everything.
US Democratic senators are calling on President Biden to press Israel for a ceasefire in Gaza. It comes as Hamas and Israel are to hold talks in Cairo on a framework that could lead to a temporary halt in fighting. Bloomberg's Michael Heath joins us now, and we heard President Biden last week saying that Monday kind of commencement that he was hopeful about may not happen. We've also heard from Vice President Harris as well.
Yeah, I mean, Vice President Harris reiterated this call for a ceasefire that the US is on about, and as you mentioned, Hamas is heading to Cairo for talks. Basically, on Saturday, the US said that it understands Israel is prepared to go ahead with a ceasefire as long as it can get details on the hostages, on their status. Its goal is to get a commitment from Hamas that it will release the hostages who are unwell or injured or old. And at this stage, they haven't heard that back from Hamas. So that's the sort of tricky side of it. So it's one thing sort of for the US to pressure Israel, which is no doubt right to do, but they need Hamas's agreement to get this happening as well. And you sort of saw the US frustration, I think, is sort of seen in an airdrop that took place along the coast of Gaza of 38,000 mules just to try to flood the place with aid. And after we saw that attack on an aid truck, after we saw the violence around an aid truck.
Yeah, and perhaps that also underscores just how much this has turned into a political risk for Biden as well.
Yeah, that's right, Annabelle. I mean, the pressure from Democratic senators and lawmakers, from progressives, Muslim Americans, that this just can't go on. We just can't have that level of deaths. I mean, more than 30,000 people have been killed, according to the health ministry in Gaza, which is run by Hamas. But still, the devastation, the destruction is people are finding it unacceptable. And it's potentially, Hamas was sort of betting on this to some extent, that it would have international pressure on Israel would get very, very intense, and it would be forced to do something. Now, what we've got coming up is Ramadan, and this is what the US and what the world wants to see, a ceasefire before Ramadan, which is about March 10th when that comes in.
Bloomberg's Michael Heath with the latest. We do have more to come here on Daybreak Australia. This is Bloomberg.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Everyone's talking about AI. But how can it help your business? Can it make chatbots act like your very own personal assistant? Yes. Put AI to work with ServiceNow.
My name is Nikolai Coster-Waldau, and I believe this moment in time will be when we started to transform the way we live to inform the future we want.
Let's go to a cooler place.
This show is about solutions and the people behind them.
The worm that can actually dissolve plastic.
This would be a carbon-neutral jet fuel.
This is an optimist's guide to the planet.
Jamie Lannister on the Roomba.
What happened, how we overpaid, why we ran into so much trouble, what really happened in the marketplace. And when I did that, I recognized, wow, there were a lot of reasons why I liked the parking assets better than I did office and retail and industrial. And so I started really noodling on the differences between those asset classes and came up with a rationale to start a business in the parking space. But I crossed paths with Penny Pritzker, who later became our Secretary of Commerce. And she liked the idea, and she and I went off on this adventure together and built a real estate operating company in the parking space.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Taking a look at some of the corporate stories we're tracking this morning in Spain's largest bank, Santander, is said to have cut roughly 320 jobs in the US. A source says about 2.7% of employees in retail operations across US branches were let go in recent days. Santander told Bloomberg it's updated its staffing model as it invests in digital capabilities to adapt to customer needs. Boeing has confirmed it's in preliminary talks to acquire Spirit AeroSystems, the supplier at the centre of the 737 MAX crisis. A deal would reunite assets that once sat under one roof, allowing the plane maker to tighten oversight over its most important parts provider. A takeover would be Boeing's biggest acquisition since at least 2018. And sci-fi epic Dune Part 2 opened by taking almost $82 million in the biggest weekend box office debut so far this year. Ticket sales across the US and Canada came in ahead of trade expectations of just under $81 million. Some fans packed cinemas for 3 a.m. IMAX screenings. It's one of the biggest opens, or the biggest open rather, since Taylor Swift, the Eras Tour in October. We'll have more ahead on Daybreak Australia as we count down to the market opens, taking a look at how the ASX is tracking so far into the session. Fairly flat right now, but the watch as well very much from what we see in Japan, given that Nikkei 225 within a whisker of hitting that psychological 40,000 level. More ahead. This is Bloomberg.
The world needs ways to reduce carbon emissions.
We're working on solutions for our business.
Like carbon capture.
That can also help businesses like yours.
Heavy industry with low emissions. Let's deliver.
Can AI make chatbots act like your very own personal assistant? Yes, with ServiceNow.
What happened here?
AI. Do we know who's getting AI right?
With HPE GreenLake, we have access to supercomputing to power AI at scale,
Helping to give us better insights.
helping leave our competition in the dust.
It's easy to feel distant from nature, but if we understand it, we can find the tools to protect our world.
I'm noticing a lot of efforts to preserve the mudflats.
Tidal flats absorb carbon dioxide. This is very important solution against climate change.
기아의 블록카본 프로젝트는 아직은 그 누구도 시도하지 않았던 탄소 상쇄 방법을 사용을 합니다. 새로운 관점과 새로운 도전이 필요합니다.
Of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
The market now has to realize that the data is just not slowing down, and the Fed pivot has given an additional tailwind to the economy and to financial markets and financial conditions and to capital markets. And all that is likely to continue to be supporting growth in consumer spending, in capex spending, in hiring for most likely the better part of this year.
That was the Apollo Management chief economist there explaining his forecast that the Fed will not cut rates this year. Let's take a look at the week ahead now, and China's National People's Congress begins on Tuesday. Officials are due to unveil the nation's growth target for 2024, which will set the tone for government policy for the rest of the year. We're also watching for inflation numbers out of Japan, the Philippines, South Korea and Taiwan. Fed Chair Jay Powell will deliver his semi-annual monetary policy testimony before Congress this week. The event is expected to provide more market insight on the US central bank's rate hike path. On Thursday, President Biden will deliver his State of the Union address. We'll have special coverage here on Bloomberg Television. And the ECB is expected to hold rates steady as it awaits more evidence that inflation is under control. It's also going to be a big week of earnings out of Asia. JD.com Neo and Bilibili are among those that are set to report. And that is your week ahead.
All right, take a look at how we're setting up at the moment when it comes to just about 30 minutes or so into the start of trading here in Sydney. We are, of course, really coming off what was a record high that was reached last week for Australian equities, and really watching to see how much we see further momentum, as we saw, of course, Wall Street setting more records as well. Early gains are being seen, pretty flat at the moment when it comes to trading in Sydney following that all-time high. It has really been a tremendous run, though. We've seen 16 out of the last 18 weeks of this rally for Australian stocks, and a lot of this is to do with expectations of what we might get from the RBA as well. Elsewhere, we are seeing a little bit of weakness there. New Zealand trading on the back foot there. Singapore Nikkei futures looking pretty perky at this point, 0.8%. As Bill was mentioning earlier, a lot of focus on Japan today, given we are looking like we're just a whisker away from that 40,000 level for the Nikkei 225, and whether that continues to drive more momentum behind this extraordinary Japanese rally. We do have a few data points out today, including Japan capital spending as well, giving us a little bit more of a gauge of how corporate Japan is feeling about investment. US futures are looking pretty flat at the moment. We're also watching geopolitics, of course, and the leaders of 9 Southeast Asian nations and Australia are gathering in Melbourne today for a 3-day meeting to commemorate 50 years of relations between Australia and the ASEAN bloc. Bloomberg government reporter Ben Westcott joins us now from the venue of the ASEAN-Australia Summit. And Ben, these relationships and the sort of fortification of these ties takes on a new importance given a strengthening China.
Yeah, absolutely. I mean, at this particular moment when we have a growing military presence by China in Southeast Asia, as well as the potential return of US President Donald Trump, geopolitics is a bit fractious at the moment. And so given that, the Southeast Asian Australia Summit is designed as a way in which middle powers across the region, from Australia to the Philippines, Indonesia and Vietnam, can come together to sort of find some consensus over the large issues that are going to be affecting them over the next 4 years or so.
Do you think that for these ASEAN countries, do you think there's sort of an assessment that Australia does have its own unique foreign policy, or is it very much seen as an extension of what the White House administration wants to see?
There's been a real shift in how Australia has handled Southeast Asia since the election of the centre-left Labor government in May 2022. Before that, many Southeast Asian leaders saw Australia as very much an extension of US foreign policy. What Washington did, Australia would follow in close lockstep. But since the election of Prime Minister Albanese and Foreign Minister Penny Wong, there's been more of a shift towards positioning Australia as a middle power alongside other middle powers in Southeast Asia, and a degree of an independent foreign policy that is more effective in bringing the bloc together to help advocate for issues which are important to them, like open sea lanes and regional and peace in the region, things along those lines. So that there has been a real shift to more subtlety in Australian diplomacy in recent years.
What about the shift that we've seen from the Albanese government and under, of course, Foreign Minister Penny Wong in terms of how we engage with China? It's a big week for China, a lot of focus on the economic vulnerabilities, but also, of course, in tandem with that is a lot more assertiveness that we've seen.
Yeah, absolutely. I mean, we're seeing China go through its own journey at the moment with balancing the risks to its own economy against political control. And I think as China is balancing that difficult situation, Australia and Southeast Asia have to, look after their own interests in that period of time. And I think that's one of the things that will be discussed here today. Already what we've seen at this summit, far more than an ASEAN in previous years, is a more of a discussion of the South China Sea. Penny Wong started off her keynote speech by offering another 64 million Australian towards maritime security, and saying in her speech that all of Southeast Asia depends on open sea lanes, and what happens in the South China Sea affects us all. So that is a clear example of maritime security being a big part and a big concern of this summit.
All right, Ben, thanks for your time. That was Bloomberg's government reporter Ben Westcott at the ASEAN Australia Summit in Melbourne. And a reminder, of course, to keep watching for the very first edition of Bloomberg's The China Show. It's your definitive source for news and analysis on Asia's largest economy. From politics and policy to tech and trends, we'll have in-depth discussions with the newsmakers who matter. The China Show premieres Monday at 9 a.m. in Hong Kong, Shanghai and Singapore. We'll have more ahead on Daybreak Australia. This is Bloomberg.
Can AI make chatbots act like your very own personal assistant? Yes, with ServiceNow.
Growing up, I was testing a lot of VFX stuff by myself in my parents' basement. I love the idea of illusion. I love the idea of wowing people. Now, working at bigger capacities, bigger scales, having a connected ecosystem has made it easier to collaborate. I'm turning this business of one into a family business. And then I walk in, I'm like, check out this new shrink ray I have.
I got a good idea.
My oldest son, he'll often say to me, when I grow up, I want to work at the warehouse and I want to make videos.
Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Taking a look at Japan ahead now, and the Nikkei reports that Japan will join NATO members and other partners for a space defense exercise in France on Monday. We're watching Nissan shares amid reports that the Japanese car maker is in talks to invest as much as $400 million in the troubled EV maker Fisker. Japan's fourth quarter capital spending and company profits data are due out in the next few minutes as well, so we'll bring those to you. We're also hearing that the Japanese government is reportedly discussing whether to officially call an end to the country's period of deflation. Let's bring our senior Japan economist, Tara Kimura. So, Tara, why would this, we know what the trend has been, right? But why would an official government calling this be significant?
The government is declaring deflation since March 2001. Although current headline figure is brisk inflation, but the basic idea is it's still cost-push inflation and kind of deflationary mindset and kind of low wage growth and low inflation state hasn't been broken yet. That's the basic concept. So government declaring that we are not in the state anymore is going to be absolutely epoch-making moment that will suggest in some important recovery from the long time struggling Japan's macroeconomy.
We have seen inflation figures either meeting or exceeding expectations now for nearly 2 years. So what does that tell us about the momentum?
Yeah, that's very tricky. Obviously, headline inflation is still clinging to 2% inflation. We just had January figure for the national CPI, but based on my understanding, it's just helped by some quirk of data by the statistical source, and given that the country is in recession and actually the consumption data is plunging. So I think the underlying momentum of inflation is getting weaker, and that's why probably that's making the Bank of Japan still a little bit cautious to end negative interest rates policy and yield curve control.
What is the kind of latest assessment in terms of the timing for when they pull the trigger, and how does this potentially play into that decision?
Actually, if the government declare it's not deflation anymore, it's going to make the Bank of Japan's life easier for the policy pivot. But at the same time, the declaration timing by the government is still obscure because obviously the GDP is in recession, and also they have a package of stimulus named under evacuating from deflation. One of them, the massive household benefit, will come in June. So probably they're starting to mull, but that doesn't necessarily mean they will declare in March or April. So I think the jury is out for the call and also the BOJ's pivot.
That was our senior Japan economist, Taro Komura, there. And of course, a dovish BOJ has been one of the factors that has really helped propel Japanese equities over the course of the past year or so. But this morning, we're very, very much tracking this key psychological level that we could hit at the open, because given that activity we're seeing in futures so far, it's indicating we're going to open above that 40,000 mark. This chart here, though, takes a look at, yes, that run-up that we've seen, but also RSI, that's at the bottom panel there, and it's at 81. So that does really indicate that we could perhaps be in overbought territory. But let's bring in Seth Fisher. He's the founder and CIO at activist fund Oasis Management. And Seth, I'm curious for your views. Do you think that the rally that we've seen in Japanese equities so far, do you think that's really justified by the fundamentals as well?
Absolutely. Everybody's making a big deal, and I think it is a big deal that Japan is finally surpassing its 1989 high. Remember, the S&P is up 14.5 times since 1989, and Japan is just beginning to get there. Japan last time was overbought back in 1989, or very expensive, but Japan, I think, remains a moderate valuations. And on the micro level, where we're engaged, we're seeing an enormous amount of corporate activity to improve profitability. And actually, across the board in Japan, companies are producing more operating profits than ever before. So yes, I remain very bullish.
I mean, and of course, producing better profits really tracks back to what you've been doing for years, which is putting pressure on Japanese companies to radically change the way that they operate. So where do you think we're at in terms of the corporate structural change governance reform process?
Okay, I think we're only mid-innings. There's an enormous amount of that left to do. There's a lot of left to do in terms of independent directors doing a continued better job of holding management accountable. And in terms of protecting minority shareholders, there's enormous more to do in terms of M&A in Japan across the board that's going to increase margins. There's a lot of still levers they can pull to improve profitability.
When you say we're at the midpoint, what are the sorts? Are you looking at? Is it looking at sort of proposing more difficult changes that you want companies to attack or enact, or is it looking at different industries? Is it scaling up the size of the corporation? What is it that is specifically tells you we're at the midpoint?
There's actually just simply a ton to do. There's a ton of M&A that's left to be done. There hasn't been any hostile M&A in Japan almost since the 80s, and so there's a lot of consolidation across Japanese sectors. I'm not talking about foreigners, I'm talking about Japanese corporates with Japanese corporates. I'm talking about within industry sectors. As in the US and in Europe, we have 2 or 3 leading companies that produce better products, that produce a wider array of products and cheaper prices to customers. You just haven't had that in Japan. And so there's a lot of leverage to increase margins in all these companies by executing in terms of just having 2 or 3 or 4 companies that are going to be a leader in all these different sectors across the board. That's actually an extraordinarily important and easy lever to pull. There remains to be geographic expansion, and remains to be actually in a lot of companies we're engaging with, and I think you'd be a lot better management. They can go ahead and figure out how to increase increase marketing, to increase globally, to improve profitability, but also just improve revenue. So these companies, a lot of these companies have not been fantastically run for a long period of time, and that's where these nomination committees need to do a better job of going ahead and making sure they're appointing the best in management. Japan still has a nepotism problem in many, many companies, where they still continue to appoint the chairman's son to executive offices. And that's one place in particular where I think independent directors can do a better job of making sure we're getting the best of management for these companies so they can be world-leading companies.
as you say, it's been a long time, like it's been, over a decade in the making. And as you say, there's also been a lot of different elements of that, the name and shame kind of campaign, clearly the rise of activist investors as well. How much do you also think that this rally has been driven by the fact that investors have been fleeing China? I mean, Japan's corporate governance certainly looks a lot more advanced in the process when it comes to Chinese companies.
There's no doubt that a lot of Asian investors in particular started looking to Japan as opposed to China. But I think this is actually systematic work that Japan has done over the last over 10 years now in terms of improving corporate governance, getting shareholders to be more engaged with companies, pushing companies to go ahead and improve their ROEs, push them to improve their price-to-book ratios, push them to improve profitability. And so I think there's actually credit goes to Japan, much more so than simply some investors fleeing China for lack of clarity in terms of the macro situation in China.
How much does the Bank of Japan, when they eventually pull the trigger on policy normalization, the impact of that subsequently on asset classes like the yen, does that make a difference in terms of the trajectory of this broader rally?
There's no doubt that extraordinary low and negative rates have been very helpful for this, and credit to Japan as well for being extraordinarily disciplined and not changing rates, not raising rates. But the numbers that we just heard as well in terms of inflation are extraordinarily moderate. I think that yes, it'll be epic making when we actually finally get out of deflation. But these are, I think, the moves by the Bank of Japan, I hope remain moderate, and I hope from a taxation point of view remain extraordinarily moderate. And so we can continue to see this rally, but we also continue to see these improvements by Japanese corporates.
Seth, what companies are on your radar at the moment? What have you been building positions in, and what are you targeting right now?
We are engaged with kind of the meat of what I would call corporate Japan in terms of companies that are both a lot of companies are consumer-facing businesses. We're involved in an enormous amount of both businesses that run retail outlets, run retail stores, sell retail products. We're involved in actually some other parts of the industrial homeland in Japan that are producing in auto manufacturers and a whole host of companies that I think have a lot of margin improvements to be done. So there is no end of companies that I think can continue to dramatically improve.
I'm curious, Seth, about the reception that you're getting, because you mentioned this nepotism problem. That makes me think perhaps sometimes it might be the case that management at a company isn't that receptive to the changes you're trying to make. But since the Tokyo Stock Exchange really started to focus on corporate governance reform, have you seen a sort of changing attitude around it in the companies that you're working with?
We've seen enormous, yes. The sea change we've seen over the last 10, 11 years in terms of since Abenomics kicked off is dramatic. Right? We've seen it in terms of companies stating publicly about their price-to-book ratios, stating publicly about their ROE targets, stating publicly about their improvements, adding enormous amount of diversity to their boards, adding enormous amount of independent directors to their boards. So there's a sea change across the board. There's still a lot more to be done. Now that companies have nomination committees, our agenda with a lot of companies that nomination committees need to do their work. They need to function. And to function properly, yes, they need to go ahead and try to find the best of management. So nepotism has gone down over the last 10 years in Japan, but I still think the 352 companies or so that continue to have the son of the chairman, the son of the president, who now becomes the next president. I think that's one example of actually how much more management can generally improve. And because they should go out and find the best of management, not just because you happen to have the right father.
Seth, really great to have you with us. Seth Fisher, founder and CIO at Oasis Management there. We do have some breaking news when it comes to Japan capital spending. The company profits numbers coming through as well. It's a big jump when it comes to CapEx. Spending year on year is 16.4% against expectations of under 3%. Stripping out software year on year, that is still a gain of 11.7%, again beating expectations. We're seeing company profits coming in lower than expectations, so 13% against expectations of 21.3%, and sales also just missing expectations as well. More ahead on Daybreak Australia. This is Bloomberg.
Can AI make chatbots act like your very own personal assistant? Yes, with ServiceNow.
Now that we're getting hybrid cloud right, do we know who's getting AI right?
Well, models and data keep growing.
No rain on the parade, huh, Nancy? The models say sunshine, Gary.
You need massive compute power.
What happened here?
AI.
One side is long and one side is short.
But with HPE GreenLake, we have access to supercomputing to power AI at scale,
Helping to give us better insights.
helping leave our competition in the dust.
Prove that you belong there. But what keeps you in the room, right? It's your talent. It's the talent that a lot of people don't see or don't think you have because they've only seen you in one way. And for me, the biggest pivot was getting out of my own way, telling myself that I'm more than just a football player.
Well, South Korean doctors have led thousands of protesters in Seoul as their standoff with the government enters its third week. For more, let's bring in East Asia government editor John Herskovich. So there was a deadline. They were supposed to get back to work. What's ensued since then, and what are we watching out for in terms of potential developments this week?
That's right. There was a March 1 deadline to get back to work, and about 9,000 of the trainee doctors, this is about 70% of the overall total, have not gotten back to work. So it's Monday, we're 2 weeks into the labor action, and the government is looking at legal steps that will start the punishment process for this. They're looking at it from a couple of tracks. For the organizer, they could suspend the medical license of those who are organizing this labor action, which the government argues is in defiance of South Korean law. And for those taking part, they're looking at a suspension of medical licenses for about 3 months. This is something that could really hurt long-term employment prospects if it was on the record that their license had been suspended. So the doctors are still off the job. The government is stepping up its procedures that could lead to punishments being dispensed.
John, if anything, the support for Japan's or Korea's government rather has increased over the course of this strike. So public opinion, I mean, it's really behind the government at this point in time.
Exactly. The polling from Gallup Korea shows about 3/4 of the public is behind this government's plan to increase medical enrollment by 2,000 slots from the current 3,058 a year. South Korea has a doctor shortage. Waiting times are long. There are not enough doctors in rural areas, and the government thinks this plan will be a way to help the process. The doctors argue that this really won't fix fundamental problems, but the public is not enamored with the doctor's position. They see it more as self-interest than helping them. And the government of President Yoon Suk-yeol's approval rating is at highs it hasn't seen since July. The people are standing behind the plan. They want more doctors. The country's rapidly aging, and there's a shortage. And the public sees this as a way as helping fix the problem.
That was Bloomberg's John Herskovich there. And a reminder to keep watching for the very first edition of Bloomberg's The China Show. It's your definitive source for news and analysis on Asia's largest economy. From politics and policy to tech and trends, we'll have in-depth discussions with newsmakers who matter. The China Show premieres Monday at 9 a.m. in Hong Kong, Shanghai and Singapore. And just ahead, we'll have the market open for Tokyo here, tracking to see if we do get that Nikkei crossing the 40,000 mark. Futures certainly indicating that milestone's possible.
Can AI make chatbots act like your very own personal assistant? Yes, with ServiceNow.
Now that we're getting hybrid cloud right, do we know who's getting AI right?
Well, models and data keep growing.
No rain on the parade, huh, Nancy? The models say sunshine, Gary.
You need massive compute power.
What happened here? AI.
One side is long and one side is short.
But with HPE GreenLake, we have access to supercomputing to power AI at scale,
Helping to give us better insights.
helping leave our competition in the dust.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
This is Daybreak Asia. We're counting down to Asia's major market opens. And Heidi, I don't want to discount Korea today, but my focus is very much on what's happening in Japan, because we've been tracking that rapid ascent in the Nikkei 225, and today looking to pass that key 40,000 mark. Futures very much indicating that that's going to be happening.
And I'm sure lots of investors in South Korean equities will be looking keenly at this, hoping that this is a trajectory that, you know, the unlocking of value in Korea follows as well. But of course, we're also watching developments when it comes to what's going on in Beijing with the political pageantry, and also, of course, the twin sessions, CPPCC and MPC taking place. But 40,000.
Yeah, certainly that level we're going to be watching closely here. You've got the open for Japan, and as we said, that Nikkei 225, taking a look at the level that we've got today, within a whisker, or rather just passing that 40,000 mark. So that's a key psychological level that we've been tracking here, really defying concerns for investors, because we've seen that big ascent, that advance from the 1989 peak from last month, and then onward, of course, past that 40,000 mark, defying those concerns, as we say, investors thinking perhaps the gains have been too rapid. You've got that RSI hitting above 80 at this point in time, but it's been above 70 for almost 3 weeks now. So certainly in overbought territory, perhaps just from that indicator, but still we're above that 40,000 mark for the first time. So very much a raising and taking us all the way back to the levels that we're at, as we said, the early 90s when they had that bubble bursting. So Japan, those gains that you're seeing here in the session today, you've got the Nikkei up around 0.8%, and broadly we're going to be watching that one. The Japanese yen there still continuing to hold around the 150 mark, and we know that yen weakness again, it's been one of the factors that's been really supporting Japanese equities given the large number of exporters. Some data to note, we just had company profits. They were up around 13% on the year. Sales as well increasing, so just another positive indicator lending into to Japanese equities. But let's change on, not to forget Korea, of course, because, yes, as you said, Heidi, Japan, that focus on corporate governance reform, Korea wants some of the same because they're also getting really focused on that as well, and we are seeing the Kospi here continuing its gains, and the Korean won a little bit firmer as well. So just a signal of that level of risk tolerance that we have in markets right now. But let's bring in Christy Tan. She's APAC investment strategist at Franklin Templeton Institute. And Christy, I'm interested for your views here. As we say, the Nikkei 225 breaching the key 40,000 mark for the first time ever. What do you think about the gains we've seen so far? Are you concerned, as we say, that it's been too far, too fast?
It is amazing how Japan actually went from the most unloved and now I think one of the most loved equity indexes across globally and of course Asia Pacific. And I think this has to do with a lot of the positive developments that has happened and keeps happening. And we saw how, profit levels of Japanese companies have been on the up and going from strength to strength as well. And manufacturing activities are also more upbeat. And at the same time, I think if you look at some of the developments that has started to manifest, and this includes the increase in wages, the corporate reforms development, and also I think, sustainable inflation that could support the overall policy change or policy shift from a negative interest rate policy and to normalization. I think these are continuing supportive factors for the Japanese equity markets. Now, at the same time, I think if you look at externally, right, so there is also the relative unattractiveness of, for instance, the Chinese markets. And also, I think there is that flows of investments funds that are looking for opportunities across the space. And this fear of missing out, given the irrational exuberance in the U.S. equity markets, is probably widening across to the Asia-Pacific region.
Yeah, and how long do you think that would sort of persist? I'm curious as well, when you take a look at the inflation outlook, we just had local media in Japan saying that Japan could consider calling an end to deflation. That could also factor, of course, into the BOJ's thinking. So how do you think central bank policy shifts are likely to play into that market dynamic?
Absolutely. So we're definitely looking at a potential shift, and this is going to be, again, a structural possibility. So in that case, timing is of course a big issue, but I think, sometime in this year, and this is largely within a lot of investment analyst expectations, that, the BOJ will at some point this year actually shift towards removing the negative interest rate policy. And what is then important is that whether or not this is priced in. And from what we have seen across the equities complex in Japan, possibly, 40,000 being breached for the first time and potentially, going from strength to strength is still a possibility, especially when we see that, the policy shift and the BOJ actually signaling that has already started to happen. And later part of this year is definitely a possibility for that.
Christy, it's interesting because if you take a look at what's driving this rally, the momentum factor for Japan has just been getting stronger and stronger, right? This winning strategy of buying stocks that are doing well. Are we starting to look at a more polarized market, though? Because there is starting to be this pretty big gap when it comes to stocks that have rallied, continue to rally, and underperformers are really starting to lag.
We are definitely looking at that, not just within Japan itself, but across the region. And if you look at how India, Vietnam, and also now Japan, these have shown that relative strength that APEC and the attractiveness of emerging markets versus perhaps, some of the opportunities in the developed markets. So going ahead, this divergence is a reflection of how the market sentiments are placing out, and with regards to the U.S., where there is narrow leadership. I think in the U.S. there is the Magnificent Seven, and in Japan, increasingly, investors are actually talking about the Samurai Seven. So there is also that momentum that is still continuing to build up across Asia-Pacific region. And we're seeing investment opportunities, and this is from the survey that we are doing across our Franklin Templeton complex. We've actually surveyed, and we've received survey results from 300 of the investment professionals within the company that shows that going ahead, well, we are expecting that, some of this narrow leadership to broaden out, and as well as not just in terms of equities, given where we think the Fed policy and the rate cuts will be and will happen. So we do expect global growth to be slower than consensus across all major regions, but at the same time, recessions will be avoided, and inflation in the U.S. will continue to moderate. So some of these factors are actually driving investment flows potentially to fixed income.
Christy, we're watching South Korea very closely because obviously regulators there want that market, the reforms to follow the trajectory that we've seen for Japan. But the response from investors to the corporate value up program has been lackluster. Do you see South Korea being able to replicate, insofar as it's taken over a decade for Japan, this level of success?
Well, there are opportunities within South Korea that are also very I would say that prioritized within the tech space and the technology space. And this continues to be, I think, a key support and pillar for the South Korea investments and opportunities and also asset classes. But at the same time, I think you're right in mentioning that, the gap between Korea and Japan could be widening and could get wider. I think this has to do a lot with also the challenges that South Korea is facing. And I think, with the U.S. elections that's happening this year, there's going to be a lot of that geopolitics concerns that will also drive a lot of selectivity in terms of whether or not, Korea will actually outperform in this case. And with what's happening across the headlines, of course, that with the situation within the medical profession that is also manifesting, I think that is going to be a drag on sentiment somewhat. But we don't expect any kind of a structural, I think, negativity that will actually affect South Korean assets significantly. I think there is still a lot of that tech possibilities and potentially, I think, the continued maneuvering of the South Korean tech companies towards the tech sector will be a key driver that will support Korean assets.
And Christy, I've got to get your sort of assessment when it comes to where we go from now from China. What are investors, do you think, keen to hear from the leadership this week as we kick off the two sessions? Is there anything that can really try and consolidate a bit more confidence, including that GDP target?
Well, China is definitely at a juncture where the policy authorities will have to send the right communication messages across, and I think they will. I think the base case is that these MPC and the two sessions that is happening this week and will probably end by the middle of this month will see that, the baseline growth of around 5% target, and also at the same time, to achieve that, I think that not only shows the conviction of Chinese authorities to maintain that growth policy, but at the same time, there will have to be more growth supportive policy and measures that will have to be implemented. So I think that in its case is a vote of confidence for investors that the Chinese authorities will do more. And we are starting to see that already happening since January. And so the pivot that the policy pivot that we are expecting, and I think markets are looking for that, around 5% growth target, around a 3% inflation expectations, and also at the same time, more fiscal policy measures that will support the overall growth momentum. I think that will be in place. And what markets will then, or investors will then look out for, is that these policies actually get implemented, more supportive fiscal and monetary policy directions. That has to be communicated, and we think that will be. And at the same time, I think if you look at then, the kind of fiscal spending that needs for this growth targets to materialize, it's probably around 3 to 4 trillion yuan worth of policy measures that will be in place.
Christy Tan, thanks very much for your time this morning. That was the APAC investment strategist at Franklin Templeton Institute. And as we were just mentioning there, China is set to announce its 2024 growth target and outline its strategy for supporting the slowing economy at the country's top annual political gathering this week. Our chief North Asia correspondent Stephen Engel joins us live from Beijing. And we heard there, we know it's going to be around that 5%, perhaps, Steve, but still it means that we're going to need to see a lot more supportive policies coming through.
Yeah, are we going to see a lot of supportive policies coming through? I think they're going to talk a good game, obviously, over the next 10 days or so of the National People's Congress, which begins tomorrow, runs probably through about the 11th. We don't have the final date yet. But, of course, today also is the CPPCC, which is the advisory body to the National People's Congress, colloquially known as Lianghui, the two sessions. That's why we're out here previewing this, because, again, as the last guest just rightfully said, it's the world really, and investors are looking at China to see what kind of forceful measures might come out of this two sessions to stimulate and to restore confidence. And I agree with the guest who said implementation will be key as well. But so far, Xi Jinping and the collective leadership in Beijing has avoided the big bazooka approach. Yes, we've had some the national team come in and support the stock market when it was wobbling at the beginning part of this year. February was a fairly decent month for equities here in China because of the state support. And also the property market. We saw banks, essentially cut the loan prime rate, the 5-year tied to mortgages. So that was a good step. But collectively, it's not a big bang. And that's what we're wondering, whether there could be more property measures to support and put a floor on this sinking confidence and, the situation for developers, and also restore confidence in the private sector. It's been absolutely battered, obviously. If you go back to 2020 with Jack Ma and the collapse, of course, of the Ant IPO and then the restructuring of Alibaba. Keep in mind, the private sector in China essentially accounts for about 60% of national GDP and 80% essentially of urban jobs. And that is a key component. You got to keep the young and recent graduates employed, and that's a struggle going forward. So there's a whole list of problems in the Chinese economy right now, and we're looking for signals that they're going to be at least supportive in both fiscal policy, perhaps even more monetary easing, as well as just confidence measures going forward.
Yeah, investors are looking for fiscal expansion, fiscal easing, but at the same time, you've got these heavily indebted provinces, right? What does that mean for, I guess, the discomfort of looking at to try and support the flagging economy versus, what these local governments do?
Yeah, I mean, that's why we're going to be really looking at the work report tomorrow at the beginning of the National People's Congress from the Premier Li Qiang, his marching orders to the provinces. Now, so far, of course, in years past, there would be, in times of economic pain, there would be stimulus going forward in the form of shovel-ready projects at the municipal and provincial level to really, stimulate growth in that form on the fiscal side. But again, it's incurred a lot of debt at the local governments, and the local governments are in fiscal distress in many cases, or strain, I should say. I'm not saying that they're necessarily going to default, but again, keep in mind that property property troubles in China really exacerbates the fiscal situations at the provincial level, because land sales have fallen off the cliff, and that is a huge part of how they get to refill their coffers. So what we're hearing essentially, that Xi Jinping, he mentioned it 128 times last year, he wants high quality development that is essentially sustainable, and this boom bust cycle of incurring high debt at the local level is not something that he wants to exacerbate further. So they are constrained, and the central government is trying to remain constrained in adding to that debt load. But at the same time, everyone's saying we need something.
Yeah, that's right. Certainly a lot of calls for more stimulus. That was our Bloomberg Chief North Asia correspondent, Stephen Engel, in Beijing there. And stay tuned for the very first edition of Bloomberg's The China Show coming up in the next hour. It's your definitive source for news and analysis on Asia's largest economy. From politics and policy to tech and trends, we'll have in-depth discussions with the newsmakers who matter. The China Show premieres today at 9 a.m. in Hong Kong, Shanghai and Singapore. Plenty more to come on Daybreak Asia. This is Bloomberg.
Everyone's talking about AI. But how can it help your business? Can it make chatbots act like your very own personal assistant? Yes. Put AI to work with